How's it going, everybody? KCG Trades here, back with another weekly watch list and stock market outlook video. Last week, we actually saw the market do very well in terms of new leadership as well as growth stocks, while the overall indexes kind of just went sideways or drifted higher a little bit, which is the most ideal situation. So last week was really a great week, especially for me, and I'm looking to continue that momentum this week. If you guys didn't notice, I did get a haircut, so you guys already know that means we're going to have a great week, and I'm very excited to show you guys my watch list for the week. But before I do so, I wanted to ask you guys, the viewers, a question. Currently, I have my stock market outlook and weekly watch list video put together in one, and I was wondering if you guys think I should split it up and basically make two videos, one at the end of the week where I talk about the stock market outlook and potential leadership in the market, and my second video where it'll just be my weekly watch list for the week. I was wondering if you guys think I should split them up and put them in two videos, basically just to shorten up the length of my videos so you guys could really pay attention to it and not like lose focus, and you could also pick which one you want to watch. So let me know in the comment section down below if you think I should split it up or leave it the way it is. I'd really appreciate your feedback, as well as leave a comment down below on 3 stocks you're watching this week. And while you're doing that, also leave a like down below. Alright, so let's just get right into it, starting with the overall indexes. And I have pulled up on my screen the Nasdaq Composite. So if we take a look here, pretty much the same as last week, where we're still in this consolidation for the past 5 months. For the past week, we did kind of drift higher, and volume was a little bit higher on Thursday and Friday. So that is a bit of a concern, as I also see kind of like a wedge pattern here. And as the action tightens up, I wouldn't be surprised if we get a little downside movement, possibly retest these moving averages and hopefully find support there and bounce back higher as we continue this overall consolidation. So next week, to begin the week, I wouldn't be surprised if we see a bit of a pullback, a little bit of a shakeout just to scare some investors, as we are a little bit extended from the moving averages, as well as having this little bearish wedge. So that might not happen, but I wouldn't be surprised if it does, and that's really what I'm seeing with the overall Nasdaq Composite. So now let's take a look at the S&P 500 index. Alright, so the S&P is still in the consolidation similar to the Nasdaq, just not as long as the Nasdaq, but in terms of this chart, really nothing to worry about. We did have some high volume on Thursday, but that was due to rebalancing, I'm pretty sure. And in terms of everything else, really nothing to worry about, nothing that screams out concern, and we're just in a regular consolidation. So until that changes, really nothing to worry about with the S&P 500. So let's take a look at the Dow Jones. And for the Dow, we see that the uptrend has been very strong, finding support at the 50-day moving average and bouncing back higher. We had strong volume on Thursday, like I said, due to rebalancing. But overall, really nothing to be concerned about. The pattern is just continuing, higher highs and higher lows. So until that changes, we are in a confirmed uptrend for the Dow Jones. Alright, so let's switch gears and take a look at the IWM, which is the Russell 2000 ETF. Very similar to the overall indexes that we're looking at right now, just in the overall consolidation as we digest the gains that we had from the March lows. And for now, nothing to be concerned about as we just bounce from the 234 area and the 210 area back and forth until we get out of one of these ranges. We're just in a regular consolidation after digesting a huge move. All right, so if we switch gears and take a look at the IWO, which is the Russell 2000 Growth ETF, this is a bit different than what we've been seeing in the overall indexes. We're not in a clear consolidation. We actually are in a little bit of a downtrend. The recent action for the past 2 weeks have been very similar to what I've been saying with the Nasdaq. We are seeing a bit of wedge action, a rising wedge action on lower volume, which is very concerning. We did see some resistance at the 50-day moving average. So like I said, I wouldn't be surprised if we do get a bit of a pullback next week to break down out of this wedge, especially growth names as well. Would not be surprised if we do get a pullback. So that is really something to watch out for when considering taking new positions. We may be due for a bit of a pullback, so just be careful of that. But like I said, that is just something I am seeing. It might not happen at all, but I wouldn't be surprised if it happens next week. All right, so another growth ETF that I like to look at is the IBD 50, which is the top 50 stocks in IBD. It is still very choppy and very volatile, so this is one to kind of stay away from for now. We are starting to tighten up, but I do see another wedge similar to what I saw in the growth ETF as well as the Nasdaq on lower volume as well. So all signs kind of point to possible pullback in the growth names, so that is definitely one to watch out for in the next couple of days. And lastly, I want to take a look at the VIX. The volatility index, as we see here, we had some huge volatility 2 weeks ago, and we've just been pulling back slowly, and we actually near the lows of the 15 level. We're actually at 1661. So with this, as well as the rising wedges on lower volume, I wouldn't be surprised if we do see some sort of pullback, get some more volatility, so this could get back up into possibly like the 20s level. So yeah, I wouldn't be surprised at all for a pullback. I'm kind of expecting one. I did sell some of my positions on Friday, but I do still have a few positions, as I like the fact that some new leadership is occurring, and I like the action that's going on in those individual stocks. So with that being said, let's take a look at my watch list for the week, starting with ABNB, Airbnb. Alright, so for Airbnb, I do like the fact we had an undercut and rally off the 137 lows. We moved forward on very strong volume, which was very encouraging to see. That probably would have been your best entry, but now we're just going to take a look to see if we could get some alternative ones. On Friday, we had a lower volume day that found some resistance at the 21 EMA. So moving forward, I want to see if we could hold above this 137 level and just continue to chug higher. That's really what I'm watching for, this 137 level. Now that we undercut it and rally back above, that level should be some support level. We should not go back under it. And if you are positioned in this stock, if it goes back below it, that would be your sign to possibly get out. But this is definitely one that I'm watching for, especially the strong volume that it had on Thursday, and it rallied back above that 137 low. So that's really what I'm watching for Airbnb. And the next stock I'm watching is AMAT, Applied Materials. So Applied Materials recently broke out of this downtrend line beautifully on strong volume and continued higher. Now it looks like it's starting to form a bit of a handle here. It also coincides with this little double bottom pivot here. That's where it's creating the handle, so that's exactly what you want to see. The pivot has been on lower volume as well, so that's good, as we see some consolidation on lower volume. You don't want to see consolidation on higher volume, so this is all encouraging signs. Wouldn't be surprised to see a few more days of consolidation, and then we're looking for a break above that 139 level to enter long, and then see if we could retest those 146 highs. AMAT has been a very strong semiconductor as of late, so this is one leader that I'm really paying attention to. And the next stock I'm watching is CRWD, CrowdStrike. So with CrowdStrike, it recently broke out of this downtrend line on better than average volume. We did see it play in sympathy with Zscaler's earnings, as Zscaler announced really good earnings. So that is definitely one to watch for, because CrowdStrike also has earnings this coming Thursday, which I believe is June 3rd. So that's definitely one to watch for. If we could have a good earnings release, then we might see a gap up into all-time highs, as Zscaler had a nice $20 gap up. So taking a look here, broke out of this downtrend line, and we're seeing it find some resistance at this little pivot here around the 226 level. So I wouldn't be surprised if until Thursday it just goes sideways, consolidates as it prepares for earnings release, and I would be really happy to see if we could break out of this 226 level, maybe gap up into all-time highs or gap up near all-time highs, have a little earnings gap and go if CrowdStrike can release good earnings. So this is definitely one to watch for. I don't want to buy before earnings, because earnings can always be 50-50. You could have a bad earnings release and just gap down. So we always want to wait until earnings is released before we initiate a position, but I would really like to see it consolidate for the next few days and then possibly gap up. That's really what I'm watching for. So the next stock I'm watching is DoorDash, DASH. So Dash, or DoorDash, is one I'm actually positioned in myself, and the price action is actually very encouraging. We did see a nice little undercut and rally after 122 level, and then we had a nice gap up on very strong volume, and since then we were kind of consolidating right along the moving averages as the price action got tighter, as well as the volume increased. So we knew that institutions were actually piling into the stock and controlling the stock, and I actually positioned myself as we were about to break out. We broke out on Thursday on very strong volume and closed around the 150s level, and on Friday we had an inside day on very low volume. So what I'm looking for to add to my position is a move above the inside day, which is around the 154 level, and I'll be looking to see if we could continue making new higher highs. There will be some overhead resistance around the 167 level, and then possibly around like the 200s, the mid 200s, 210, 220 levels, but there is a lot of room to get some gains in between there. So this is definitely one to watch coming up, and your risk is very defined, because we want to get our stop right below the inside day. If we buy above it. But for me, since I positioned myself in this within this symmetrical triangle, my stop is a little further out. But if I do end up entering above the 154 level, I'll definitely raise my stop to make sure my trade is in the green. So that's definitely what I'm watching for DoorDash. And the next stock I'm watching is FUTU. So FUTU is another one that I'm very excited for. It did recently break out of this downtrend line on pretty good volume. We see here the past 5 days have been green. Has just been kind of like chugging along higher. Some good volume days, some low volume days, so that is just one to pay attention to. I am currently positioned in this stock as well, but I wouldn't be surprised to see this one rip because it does have days where it just rips. For this stock, sometimes you want to sell partial of your position when it rips, because it does have a tendency to rip and then come back down. So if you are positioned while it rips, it is probably smart to just sell some or sell possibly half just to lock in some gains. But like I said, the fact that it's back above the moving averages, all of them, and broke above this downtrend line, says that it has a possibility to continue chugging higher. And you never know, one of these days it could just completely rip and possibly stick. The stock also has tremendous fundamentals, so this stock is definitely setting up for a sustained move, possibly hitting all-time highs in the near future. So this is one to watch for sure. And the next stock I'm watching is STLD. So STLD is a steel name that has been acting very strong as of late, and the setup that I'm watching for is very, very simple. I'm just looking for a downtrend line breakout here. If we see here, the 62.57 level is right at the cusp of the downtrend line, so I'm looking for 10 cents above it with strong volume. So 62.66 is the area I'm looking to initiate a buy. Obviously, we want to see volume accompany it, but if we take a look at how strong this trend has been, finding support at the 21 EMA as well, this stock is very, very strong, and as long as we continue this nice uptrend, I'll look to buy every chance I can. So that's really what I'm watching for STLD. Very simple setup, very easy execution, and your stop loss would probably be just below the 61.20 level, or if you want to give it more room, you can put it at the lows of this low here around the 59.44. Really up to you, but that's what I'm watching for STLD. Next stock I'm watching is TIGR, TIGR. So TIGR is a bit flawed due to the fact that it had a 66% drawdown, which is kind of more than you would want to see, but the fact that it is setting up once again is very encouraging. It did have earnings released recently and on very strong volume, and it gapped up and it's held its gap ever since. Now essentially we're looking to break out of this little pivot here around the 23.30 level. It did get above it but closed right below it on Friday, so I wouldn't be surprised maybe we could get a few sideways consolidations before we blast above it. But once again, that's just the ideal situation, doesn't mean it's going to happen, but that 23.30 pivot level is very important to break out above it, especially with the strong volume patterns that's been occurring recently. Shows that institutions are piling back into this stock, so I wouldn't be surprised to see this chug along higher and eventually retest those highs in the near future. So one to watch for it, definitely, especially if we could get a few sideways consolidation days, maybe an inside day before blasting higher. That's how I'll enter this stock. The next stock I'm watching is UPST. So UPST is a very strong name that actually has some wild swings. So if you were to get in this stock, I would really recommend doing like a half position size due to the volatility that this stock has. We did have an inside day on Friday, but it was on higher volume than Thursday, which you don't really see that often. But what we really want to see with this stock is just some sideways consolidation, really get the action to tighten up, maybe a few more inside days as we just find some resistance around this 166 level. If we could get some consolidation, just some slower action, some lower volume as the action tightens up right before we get a blast off into new highs, that would be very encouraging to see, and that's really what I'm looking for. Obviously, we don't always get what we want, but that's the action I want to see with UPST before I decide to get into this stock. Next stock I'm watching is VSTO. So VSTO had a very strong move on Thursday on nice volume, and on Friday we had a good inside day on very minuscule volume. So that's exactly what you want to see when a stock digests its gains. Essentially, there's no real setup as of yet, but this is one to watch for if we could get some sort of symmetrical triangle action going on as the stock continues to digest its big move up. Also, as the moving averages start to catch up to price, I want to see just some back and forth action along this symmetrical triangle, and then a breakout back above into all-time highs is what I'll be really looking for. So this isn't really a setup I want to play this week, maybe in the next few weeks if the stock sets up as I would like. Obviously it might not, it could just rip higher or just pull back down and close the gap, but this is definitely one to watch for, especially the good volume patterns that it's recently occurring. So yeah, that's really what I'm watching for this stock. And the last stock I'm watching for the day, for the week, is Zscaler. So Zscaler, as I mentioned with the crowd setup, just recently announced earnings last week and had a huge gap up and found resistance around that double bottom pivot around the 200 zone. It held the gap up, and on Thursday it kind of went below it, but it rallied back above it and closed near that high volume close day. So that's good to see. Essentially, like I said, we have this double bottom that's going on, and the pivot is right around the 200 level. But like I said, with crowd, how crowd played in sympathy with Zscaler's earnings, I wouldn't be surprised to see Zscaler play in sympathy with CrowdStrike's earnings, which is on June 3rd. So for now, I want to see some consolidation as well right below the pivot. And if we could get a good earnings from CrowdStrike, I would like to see this get above the 200 level and essentially retest these highs of 230 eventually. This is setting up very nicely, and if the earnings of Crowd could really set this up to blast higher, that would be great. So this is definitely one to watch for along with CrowdStrike, and that's essentially it for this weekly watch list. I hope you guys really enjoyed the video. Please make sure to comment down below on the question I asked earlier, and if you have any more questions, leave them in the comment section down below. Don't forget to like, share, subscribe with your friends and family, and also follow me on Twitter at KCG Trades. Hope you guys have a wonderful week. Take care. Stay safe.